Bull market. What is it and how to take advantage of it? This and much more in today's video. Hello and welcome to the Business Class, your YouTube channel, where you learn all about the topic money. Although money and wealth are not everything, you barely get anywhere without in our modern day society. Seemingly everyone nowadays wants to be rich, famous and live a life in wealth, but of course not everyone will manage to do so. However, if you are determined, focused and working hard, you will be able to achieve your goals. So do no longer waste your potential, do no longer wait for your luck to happen from alone, improve yourself every single day and you will soon start to see the fruits of your success. With my videos, I want to provide you with motivation, knowledge and inspiration, so that you can reach your goals as fast as possible and make the best out of your life. If you have general interest in content about topics like make money online, stocks, luxury and lifestyle, subscribe to the channel and press the bell button, to not miss a single video. Also write a comment with your suggestions and wishes, which content you would like to see more often. And now let's start. A bull market is a situation in which prices in financial markets are rising or are expected to rise. The term, bull market, is most commonly used to refer to the stock market, but can be applied to anything traded, including bonds, real estate, currencies and commodities. Because the prices of securities are constantly rising and falling as they trade, the term, bull market, is usually used only for long periods when the prices of most securities are rising. Bull markets often last from a few months to several years. Understanding bull markets. Bull markets are characterized by optimism, investor confidence and the expectation that strong performance will continue for an extended period of time. It is difficult to consistently predict when market trends will change. Part of this difficulty stems from the fact that psychological influences and speculation can play an important role in markets. There is no specific, universal indicator used to identify bull markets. However, perhaps the most common definition of a bull market is when stock prices are up more than 20% from recent lows. Because bull markets are hard to predict, analysts usually recognize the phenomenon only after it has occurred. The most notable bull market in recent years was from 2003 to 2007. During that period, the S&P 500 index fell for a while and then rose significantly. The financial crisis of 2008 led to a bull market, followed by another major drop. Causes of bull markets. Bull markets usually occur when the economy is strengthening or has already strengthened. Bull markets often coincide with periods of high gross domestic product, falling unemployment, and rising corporate profits. Investor confidence also tends to rise during bull markets. Demand for stocks is usually positive and the overall tone of the market is positive. In addition, IPOs tend to increase during bull markets. It is worth noting that some of the above factors are easier to quantify than others. For example, company earnings and unemployment rates can be quantified, but the overall tone of the market is more difficult to measure. Supply and demand for securities is a swing. Supply is weak and demand is strong. Investors want to buy securities, but few want to sell. In a bull market, investors actively engage in the stock market to make a profit. Characteristics of a bull market. A bull market has several characteristics. For example, trading volumes are increasing as more investors are willing to buy and hold securities in anticipation of capital appreciation. In addition, securities in a bull market are usually highly valued because investors are willing to pay more for them because of potential price increases. In addition, a characteristic feature of a bull market is the high liquidity of the market. There is more demand for securities and fewer sellers, so it is easier for investors to buy and sell quickly and at reasonable prices. In addition, companies that perform well in a bull market may choose to reward shareholders with higher dividends, which is attractive to income-oriented investors. Finally, a bull market may see an increase in the number of companies going public or raising capital, giving investors an opportunity to participate in the growth of promising new companies. Bull and bear markets. The opposite of a bull market is a bear market, which is characterized by falling prices and is usually surrounded by pessimism. A popular belief about the origin of these terms is that bull and bear, referring to markets, came from the way animals attack their opponents. Bulls raise their horns in the air and bears swing their paws downward. These actions are metaphors for market movement. If the trend is upward, it is a bull market. If the trend is downward, it is a bear market. Bull and bear markets often coincide with business cycles, which consist of 4 stages: expansion, peak, decline and trough. The beginning of a bull market is often a leading indicator of economic growth. Because people's sentiment about future economic conditions affects stock prices, markets often rise before broad economic indicators, such as gross domestic product, GDP, growth, begin to rise. Similarly, bear markets usually begin before the economy begins to contract. If you think back to the recessionary period in the US, you can see that the stock market fell months before the GDP declined. How to take advantage of a bull market? Investors who want to take advantage of a bull market should buy early to take advantage of rising prices and sell when they peak. Although it is difficult to identify the bottom and peak, most losses are minimal and usually temporary. Below are some well-known strategies that investors use during bull markets. However, because it is difficult to judge current market conditions, these strategies involve at least some degree of risk. Buy and hold. One of the most basic investment strategies is the process of buying a particular security, holding it and possibly selling it later. Investor confidence is very important to this strategy. In other words, they cannot hold a security unless they expect its price to rise. For this reason, the optimism that a bull market brings with it encourages buying and holding. Increased buying and holding. An increased buy and hold strategy is a variation of the normal buy and hold strategy that carries additional risks. The premise of the buy and hold strategy is that investors will continue to increase their holdings as long as the stock price of a particular security continues to rise. A common method of increasing stock ownership is to buy a certain number of additional shares for each rise in the stock price above a predetermined level. Additional purchases through retracement. A pullback is a short period of time during which the general trend in securities prices reverses. Even in a bull market, stock prices rarely continue to rise. Often there is a short period of time in which there is a slight decline despite a continuing uptrend. A little hint for you: if the content of the video is important to you and you want to benefit from it in the future, you can easily save the video to your playlist or click on "Watch Later" so that you can watch it again at any time you want. Or, if you don't watch this video as a logged-in member, just save the video as a bookmark in your browser, to always have easy access to it. Some investors see a pullback in a bull market and buy into the market when the pullback occurs. This is because if the bull market continues, the price of the stock in question will rise quickly, providing investors with an undervalued purchase price. Swing trades. The most aggressive way to profit in a bull market is what is known as a swing trade. In this strategy, investors take a very active role and use short selling and other techniques to try to maximize profits as changes occur in the larger bull market. Why do stock prices rise in a bull market? Bull markets often exist alongside strong, robust and growing economies. Stock prices are driven by expectations of future earnings and the ability of companies to generate cash flow. A strong productive economy, high employment and growing GDP all suggest that profits will continue to grow, which is reflected in higher stock prices. Low interest rates and low corporate tax rates also have a positive impact on corporate profitability. Why might a bull market turn into a bear market? A downturn in the economy, such as a recession or rising unemployment, makes it difficult for stock prices to sustain growth. In addition, recessions often worsen investor and consumer sentiment, and market sentiment leans toward fear and risk aversion rather than greed and risk-taking. Conclusion. A bull market is a financial market characterized by rising prices and investor optimism. It most often refers to stock markets, but can also refer to bond, real estate, currency, and commodity markets. Bull markets tend to last a long time and are characterized by an increased demand for securities, rising corporate earnings and GDP, and falling unemployment. The opposite of a bull market is a bear market characterized by falling prices and investor pessimism. The terms bull and bear are thought to come from the way these animals attack their opponents. And if one day, you want to build up your own business or you have one already and want it to grow much bigger and faster, always have in mind that starting a successful business and earning money takes time. You need perseverance and a lot of stamina. It's like you growing a small plant right from the seed. You never know how fast it will grow, how tall it will get, and how many fruits you will be able to collect. It is the same with every business. Some work great, some flop, and some could become very successful. But people way too often resign much too early. So follow my advices, try out different methods, and sooner or later, you will find the one that suits you the most, that fits best to your skills and knowledge, and you will have a well-earning business. No matter if you want to make money online, by affiliate marketing, drop shipping, or even stocks, everything is possible. And even though growing a business and making money can sometimes be a lengthy and tedious issue, it's all worth it at the end. Just stay focused to your goals, work smart and hard, spend your time and resources effectively, be persistent, and sooner or later, you will have success. You will reach your goals and earn enough money to live the life you ever dreamed of. I hope this video was helpful for you and I was able to impart knowledge to you, give you new ideas, or simply inspire and motivate you to change your life in a positive way. If so, please leave a like and write me your opinion and content requests in the comments. If you have general interest in content about topics like make money online, stocks, luxury, and lifestyle, subscribe to the channel and press the bell button to not miss a single video. Thank you very much for your interest and especially for your time. And hopefully, we see us in the next business meeting.